Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and Truth Bomb Tony, he's back. He's back from his jaunting around the world. The borders are open and off he went. And it looks like he's brought a friend back with him because there's a monkey sitting behind him. I'm not quite sure what that's telling us. Loving the new area, loving the fish in the background. I guess you're going fishing, are you? No, you don't want to eat those. Tony, great to have you back on Small Caps. Welcome home. Did you have a good trip and any surprises while you were away? Did the markets have been fairly flat, haven't they?
Well, I did read the comments of the last interview, and there's the consensus that I'm defeated. And the monkey's off my back now, and that's the shock monkey. Because I'm not defeated. I just had a complete gutful of watching good companies getting sold off, whilst the real rubbish on the market, I won't mention any names, continue to perform. So, my partner's Hungarian, and we rented a nice apartment, and my mother-in-law moved in, and I worked the 2 a.m. to 8 a.m. shift. Yeah, it's a bit like my old shift work days in the cops. You just got to work out when to sleep, when to eat. And the one thing that surprised me was we went shopping, just groceries, and my son is a little bit anal retentive with the calculator, and he calculated that Hungarians pay $61 for a basket of groceries, Australian, and that was the same price as Coles. So here we are in Eastern Europe. They earn a quarter of what we earn, and their grocery prices are just as expensive as Australia.
Wow.
And that's 25% inflation. So these people are struggling, and I've decided to go alcohol-free for the entire year. So I couldn't compare the beer prices, but lots of Brits go there, and hence, so obviously beer's a bit cheaper, but unbelievable that they have to struggle with that inflation level, and it's just amazing. But it was good to see how the rest of the world, or a bit of Europe, is performing. It was back now. And
I think the inflation genie is out of the bottle, well and truly, when it comes to certainly Europe. I think that here in Australia, possibly the US, it's a little bit of a fudging of the numbers, but inflation's here. It's here to stay. It's not transitory. It's very sticky, and it will continue to be sticky going forward. Having said that, there's always opportunities. So I often say to people, Tony, I say, be prepared, not scared. So over to you. How do you think they should be preparing during these times? What's going on?
Well, interestingly, Pip Traders are back. I'm seeing a lot of CXA, which is SIBO. That's the old Chi-X. So these are algorithmic traders that will come in and try and trade something for pips. They're back with a bit of a vengeance. Some of these stocks, can 4 or 5 bag on the back of this attention. Some stocks will fire up on an XRF reading. So I think greed is making a comeback, and that's what you need in small caps, where investors and speculators realize that this is a mechanism to make money, and the stock market is probably the best game there is, really. So I've noticed an uptick in trading volume, but in saying that, the stock that I'm most long in, Maronan, came up with some really nice numbers, ran up to 33.5 and back to 25.5. So what that shows me, Kerry, is that traders will come in and try and make money. They'll be disappointed and they'll leave. But in these niche stocks, all the shareholders are trapped and loyal. So it takes time to get some decent buying in that will push that through. And I've seen that in some other stocks. So in the early stages of a small cap recovery, the rallies are short and sharp, but there's no follow through. Okay. And also what you get at the first sign, it's like whack-a-mole. As soon as a market recovers, bang, I better hit that. Let's get out on the close. Let's do this. So it's frustrating, but I think it's all part of the cycle. And I think now, if you look at the major indices, they're overvalued. But small caps ran their own race, unless you lithium or you have a clay-hosted rare earth deposit. Pretty much will amount, it's not going to even get made into some pottery. But that's what punters want, and that's what small cap stocks are delivering. And that's give the crowd what they want. And I think you don't want to become addicted to trading these stocks, because as soon as that bandwagon ends, and it will, the companies will go to sleep and they'll wait for the next bandwagon. So I just can't believe how well a lot of these stocks that have vended in projects have done. The valuations are ginormous. And I guess for those in lithium, Liontown was the savior. I mean, that stock was one of the most heavily shorted on the market. Lithium price crashing, cost overruns, and suddenly they get a takeover.
Yeah.
And I tell you what, it's hard enough to will a share price to go up, yet sit there and hope for the bloody thing to die. And as you know, with shorting, your losses are unlimited. So I think in a roundabout way, I'm seeing lots of capital raisings. These have to happen at low prices. And those in the broking industry know that if you go to, it's a bit like Rick Rule. He'll approach a company and say, look, I'll give you the money, but I want all these warrants. And Rick's quite open about that. And that's what brokers are doing to some of these companies at the moment. They're saying,
tell us how that operates, Tony, for those out there that might not know when you mention that, how that actually, why that's important.
Well, unfortunately, exploration for a gold deposit, you don't have a GoFundMe page or the coin collection at church. You need to raise money. Drilling's expensive. Smart people realize that the company needs to raise money. A lot of those shareholders already in it are fully invested. So they'll come in and say, look, yeah, I'll raise you some money. I want some shares, but to get me over the line, I want some options, normally with a low exercise price. And sadly, companies need to grow. They need money. And the broker, it's a buyer's market. So the broker will negotiate a good deal. And at the moment, these are coming thick and fast. It's just a case of you don't want to go dormant in this market. You need to get out there. You need to grow, because at some point, these gold and silver juniors are going to catch a wave, and you want to have decent drilling results and having the courage to go out and drill them. So, yeah, it's a buyer's market. I've seen Rick and other corporate types do it. And, yeah, it sucks for us shareholders in at higher levels. New money will come in. But in most cases, those in these stocks aren't loyal at all. It's the old flip and fee model. They'll take their fee and they'll move on to something else. But I reiterate to my clients that it's all about the fundamentals. Yes, we're getting some annoying dilution. Yes, you're down on that stock. But if the fundamentals stack up, then it's you're still going to do well. And another point is, I look back over my 25 years, I look back at the stocks that have done the best for me, and all of them have come out of adversity, not listing at 20 cents and trading at 21 cents forever. So it's a buyer's market. It's a bit of a paper fest. But at the moment, I think that speculators are going to look for the next hot sector. And once they get over these stupid clay rare earth projects and some of these, the lithium sector, as I keep saying, it's like turning up to a party at 3 a.m. holding a vegan pizza. You're too late to the party. And then suddenly, if these sectors cool off, then let's have a uranium bubble. But that's how markets operate. And that was apparent during the tech bubble.
Absolutely.
Again, even the best mining people went .com because they weren't getting any attention. And we look at what came out of that. So I think that there's going to be lots of opportunity, lots of money to be made. I'm watching a few of my stocks recover, which is good. One you recently interviewed, Radio Farm. I think that company's got a
Fabulous
great future.
company. Yeah, I think that's got a big future. But just before we go into all the companies, you mentioned Rick Rawl, and I am going to do a shout out for Rick because I'm going over for it. That's important. Rick does a symposium, a conference in Miami, in Boca Raton, Ratmouth, each July. So it's the 24th to the 27th of July. And Tony, what I want to do is I want to get as many Aussies coming over. We had about half a dozen there last year, but I want to get a big Aussie contingent. So if you're listening to this and you feel like coming along, make sure you book. It's a fabulous conference, and it's run by Rick, and you get pretty close access to Rick. Anyway, that's what I'm trying to get.
Oh, well,
you should come, Tony.
What was that?
You should come.
Well, I liken these junkets to something I do at the top of the market. So when gold's 5,000 an ounce, I'll see you in Florida. I'll probably be playing lawn bowls, sitting in a rocking chair, drinking tea, smoking a pipe. But yeah, I've always wanted to do PDAC.
Sorry, are you saying that gold won't get to 5,000?
Well, I could be a lot older by then.
Yeah, I tend to agree with you.
So I think what people need to realise is Rick's incredibly smart.
Yes.
Incredibly smart. And he oozes common sense. I'd say he's almost the Warren Buffett of small caps. And you look at Warren. He used to trade cigar puffs. He called them cigar stocks, where it's got one drag left of the cigar and he'd get out. But Warren got too big for specs. So obviously now he sticks with blue chips. But yeah, you could learn a lot from Rick Rawl. And yeah, well worth getting to Florida, but I'll probably see you there in 3 years.
All right, mate. All right, let's move on to some of the companies. You mentioned Radio Farm. I think the ASX code is RAD. That's coming back to life. I recently did a chat with Leslie from Imugene. Another one. These are biotech stocks, but some of the stuff that they're doing in there is groundbreaking. And I don't think the market's woken up to exactly how important the work they're doing and how close they are to a breakthrough.
Oh, exactly. And Australian biotech investors don't appreciate the companies, hence why a lot of them go to the States. But I mean, Imugene got to $3 billion market cap, which was incredible. And there's so much volume in Imugene, you can change your mind 20 times a day. I love it, hate it, love it, hate it. Wait a sec. But I did watch that Jennifer Chow interview you did from Chimeric.
Mm-hmm.
I watched that 3 times.
Wow.
And,
she was impressive. I read a lot of information.
I mean, people don't realise okay, I'd rather a commodity I can make some nice pottery out of, or I can back a company that's going to prolong someone's life with glioblastoma, or have what could be a revolutionary drug that in engineered mice knocked out 7 cancers. It just completely eradicated them.
Yeah.
And these scientists, they get published in Nature or some other cancer journals, and they're excited, and the Australian market sells them down because the share price is dropping. So I'm looking at the biotechs now thinking, well, maybe they've reached the bottom. I look at some of my mining stocks. I mentioned Maronan. Copper Search are about to go on a drilling campaign within days. So this is out in the Peak and Denison of South Australia. But I should reiterate.
What's the ASX code? What's the ASX code?
Charlie Uniform Sierra.
Okay.
Now, this is either hero or zero. And as they said on Wall Street, you can't get a little bit pregnant. So you're either going to halve your money or make 5, 10, 20 times. That's it. And the odds are that it's not going to be mineralized. But they're out there trying, and it's nice to watch these stocks in hindsight, saying, oh, next one I'm going to get on a big discovery. So that's one of banking a lot of money on. Our gold stocks such as Pac Gold.
Love Pac Gold.
Yeah. It's asleep on. It's like the Melbourne Cup. It's asleep on the rails. It's waiting to get reinvigorated with some drilling. I just think that you've got to look at these gold stocks and how the upside comes. You look at De Grey. Admittedly, they drilled into 10 million ounces, and they a tin pot company. So I'm looking at Pac Gold, and generally I have stumbled on a gold company. I'm going to make a brave call and say it's the most undervalued gold stock on the market, and that company is Saturn Metals.
Oh, I know. I want to try and get them to come to the gold conference. So shout out to you, Ian.
Yeah. So the code is Sierra Tango November.
Yeah.
And they've got about 1.5 million ounces. It's low grade, but they are going to try and get it produced by heat leach, which is acid, as opposed to building a conventional mill. I think their exploration ground is astonishingly good. I think they're a corporate target. And they've also got a gold project in New South Wales at West Wyalong, which they don't talk about. Plenty of research out on them. And the research analyst at Shaw's had to discount them a further 50%. So the valuation went from 93 to 44, based on the fact that Australians don't understand heap leach gold mines. A lot of it, I think 70% of the world's gold production comes from heap leach. I might be wrong. So I've looked at it. There is a fund selling at the moment, a fund that everyone thinks is God, but sometimes funds have multiple arms. It's a bit like an octopus. So, yeah, I think that's the best value gold stock on the market. And no one will probably believe me because a few of my other stocks aren't doing too well. The red-headed stepchildren, and that's this game, Kerry. I've been doing it 25 years, and in order to deliver clients $1 million win, I've got to go through all this shit. And what happens with markets like this is it's like I grow spikes because, who wants to sign up with Locantro? Because he said this stock was good and it's halved. So I get low client growth. So in the end, I think it all balances out, to be honest.
Okay. Just a little while ago, you mentioned uranium. Is that featuring at all in what you're looking at? Because you mentioned a copper stock and you mentioned a gold stock.
Yeah.
A couple of the biotechs. And by the way, I totally agree with you. I think biotech has been on the nose. So has gold. But going back to biotech has been absolutely the red-headed stepchild for far. Nothing against red-headed stepchildren, by the way. Yeah. But it has been on the nose for a long time. I think the biotechs are on their way back. Uranium, I'm surprised it's not stronger than it is. Zero carbon emissions, great way to energy, but we still seem to be a little bit scared.
I didn't understand that.
Yeah, my phone just thought you were talking about.
Apple.
My phone was just it thought you were talking about cigars. So I don't know what an emissions got to do with a cigar. But prior to my phone rudely interrupting, what was your question?
The question was, I'm surprised that the uranium sector hasn't taken off more. We've got a zero carbon emission sector. We've got governments around the world saying, we don't want carbon emissions. Why hasn't the uranium sector taken off? I mean, I'm a little bit flabbergasted. And I want to know if Tony Locantro's looking at that at the moment, or are you saying, no, I'm focused more on the copper gold sector? Biotech.
Well, uranium was like Axl Rose turning up to a Guns N' Roses concert. The uranium bubble was supposed to come in 1998. It came in 2005. So these things can always come later than what we expect. I think uranium, again, after that Sprott Fund excitement where some stocks 10-bagged, I think it's now become contrarian. And all the Athabasca Basin stocks have gone to sleep. Some of them have almost halved since listing. So at the moment, it just can't catch a wave, and there's no real greed yet in that sector. So
isn't that the time for people to be looking at it?
I think so. You can look at the bigger companies, the producers, but then I tend to look at the explorers. But at the moment, unless you're really into a sector that the punters want, you're just going to drift lower. So is uranium going to be next? No, look, let's just have a bloody gold and silver bubble and may the best traders win. That's all I care about. I told my clients you can get your master's in selling, you can get your master's degree in buying at the bottom. Let's get a degree selling at the top. But look, we always have exposure to uranium, albeit limited. I probably have to catch up with what Brandon from Bannerman's saying on the price catalysts for uranium, but it certainly can have that push, because if you look at the EV dream with all this green energy, it's, there's not enough copper to fulfill this. So it's never going to frigging happen.
I don't think so either. I don't think so.
So you look at least we've got Tesla now talking about cutting prices now for cars, so we can maybe transition towards electric vehicles. But what I've learned through my career is you don't focus heavily on these super cycles, these revolutions, because all you do is end up disappointed. So
yeah. A bit of talk around the neighbourhood, if you like, that the markets could, it's a climbing a wall of worry, but that it potentially later this year we could see, because of sticky inflation, because of interest rates continuing to rise, that there could be a bit of a collapse in the share market. Any views, anything you've heard? How should we be positioning ourselves?
Major indices overvalued for starters. PE ratios too high. We haven't factored in high borrowing costs, which of course is interest rates. We haven't factored in high production costs passed on to consumers. Yeah, markets can fall on good news.
Mm-hmm.
So indices tend to be a bit of a forward-thinking indicator. So we can have an indice. Let's just have a grinding, the Dow Jones S&P grinding lower for a couple of years, and we could have a crazy gold and silver bubble. So there's always something to worry about, a deterrent from getting involved. Yes, markets are overvalued. I look at, sadly, what's happening in New Zealand, especially defaults going through the roof. Interest rates are high. I think that the New Zealand market in particular is on the verge of a very hefty correction. And what I think
are you talking the property market?
This is property.
Okay.
This is property. Defaults are about to skyrocket. And I look at it, I take the psychological approach, Kerry, where 2 years ago, if you're going to buy a house for $900 and you're borrowing $700, the interest bill was $14,000 per annum at 2%. Now you're looking at $42,000 to $45,000 per year. So I think the mentality of the buyer is certainly going to shift. And I know that's my mentality as well. So I don't believe this crap that we're only going to see a mild correction in property, a mild correction in banking stocks. I think we've got a long way to go. And I just think that the worst thing to happen to the world is cheap money.
Absolutely agree.
I think the black T-shirt, colourful logo era is over. You look at all these people and say, well, shit, I'll just get a black T-shirt. I'll come up with a fancy logo. The name of the company will end in R. And then capital will be thrown at you. And that's what's happened. All these startups now sadly going out of business because you could get cheap money. And it's like the guy off the castle that designed the car washing system with the brush. I mean, everyone's an ideas man, but that's really sad. And the layoffs are escalating. And I think
Australia or US or?
Well, it's Australia. You look at all the major techs. You look at the, sadly, company like Milk Run, which, I mean, this is serious stuff because people are losing their jobs, their livelihoods. Yeah. But it just goes to show you what cheap money can do. It just causes delusions of grandeur because, I mean, we all want to be the next Uber. We all want to be the next Deliveroo. Immediately they left, or DoorDash. There's just not enough demand for these businesses, which largely came out of COVID because COVID's dissipating and sadly access to cheap money as well. So we think we've got startups collapsing. property will continue to fall. I know there's been a bit of a lull, but that just provides families in financial strife a window to get the hell out. And I mean, this isn't a new paradigm. Interest rates, unfortunately, are normalizing. They're talking about changes at the RBA, Kerry.
Yes,
but that's just like putting a Band-Aid on a gunshot wound. It's too late. It's over.
Yeah.
Families are hurting. How can anyone afford to pay 30 grand a year more interest when they balk at getting Paramount Plus because they want to watch another show? I mean, we need a reality check, and COVID, I think, pretty much was the hippopotamus in the room. And sadly, this consumerism, this rush to buy crap we don't need to impress people that hate us anyway. I think the world's just gone batshit crazy, and now we're going to start paying for it.
Well, we might start paying for it in a completely interesting way, and that is, and I don't want to get into this because we'll be here for 10 more hours, but when you see the likes of China and Russia and the BRICS nations, the Brazil, Russia, India, China, South Africa, there's some interesting moves going on there, which lead me to believe that these guys are going to be looking more to be paying for things in gold. I think the next few years are going to be very, very, very interesting when it comes to economies globally, and the shift from west to east is going to be interesting.
Yeah, that's a big call. And I don't see why gold can't catch a bit of a wave. The hot money can go to something that actually has some value rather than some other sector, which I could give a flying about, to be honest, because I'm not joining any cults. So
not yet anyway. No. Tony, we're running out of time.
Yeah, no worries.
I just want to ask you, because I love to give you the final word. Final word goes to you, that our audience out there always says, what's Tony thinking at the moment? So give them some words of wisdom as we wrap this up.
Buy low, sell high, stick to the fundamentals. That's how IBM and Hilton were built. Those that watch Wall Street more than twice will know what I'm talking about. Don't be spooked. Don't go on Twitter and get spooked by all the negativity.
Yeah.
It's just negativity. You've got people protesting. You've got shit happening. We've got, the French just want to blow their own city up. It's not, once you walk outside without social media, you rely on the Financial Review for share prices. It's just like being back 30 years ago. So as I said, don't chase rubbish, look at quality, start reading all the quarterly reports, pay tax, don't break the law. That's it. Be a good person, be humble, stay humble.
That is a perfect way to end it. Stay humble, be a good person. And we hope you enjoyed this conversation with Truth Bomb Tony. We'll be back again in a fortnight's time. But for now, Truth Bomb Tony, thanks for joining us and welcome back to Australia.
Thanks, Kerry. See you soon.